Hello everyone, this is Spectro, and this is going to be the complete walkthrough on how to use the whole Spectro system, both the Spectro indicator and also the screener. So I'm going to show you how I use it, how it's my setup on the daily basis, and we're going to go step by step, explaining every and single feature that Spectro has. So that's going to be a long video. It's something that you might want to have some time. But this is something that if you pay attention, you pretty much have a very strong and flexible and robust trading system. So, I mean, you might sacrifice 1 hour, 2 hour stops. I really don't know how long we're gonna go. I'm gonna take my time and I want to make this the ultimate video. So you have a system that is ready to go and you don't have to understand so much about trading to actually execute it, okay? So what you're seeing there, it's my setup with three screens on TradingView, and I'm going to explain exactly what is what so you can understand the concept. Okay, so we get a lot of, and that's good because we will talk about the first thing, which is the most troubling thing. When users come to me, from Hypester, and I see that most of them, they're just trying to find a signal, like a buy and sell, where they just will set up an automation of some sort that will just start buying and selling, automatically. I'm telling you right now that you're not gonna make a lot of money or no money at all. You can make money with that if you're smart, but honestly, if you're smart, you're not gonna do it. And we're gonna talk about that right now, and you can understand how the system works and the limitations and what you have to expect from it. Because here's the thing, if you don't have realistic expectations, you don't last long, okay, anywhere. So the first thing is this system is not meant for automation. So that's something that you have to understand very clear, because when you're trying to automate a system, you want to eliminate the bad signals. For instance, let's just take a quick look here. Very, very simple thing so you understand the concepts, but this is a good trade, right? Obviously, this is another good trade that we're into right now. But you see, those are bad trades. Those are bad trades. Those are trades that you're gonna be like -1%. You're gonna be stopped, or here, for instance. Of course, the short makes up for it. But when you have a bot going on, it's gonna buy every single time. So people never consider the commissions, and that can be really troubling, especially because beginners, they want to run everything on short time frames. So first tip for you guys, learn how to trade on bigger time frames. All right, I know that beginners, they're anxious, they want to trade all the time, but that's not the best way to go, right? You cannot force the market to give you trades. Usually when you trade on larger time frames, the range is bigger. What I mean by that is that the moves, they are bigger. So the move here to here, we're talking about, a 20% move. And if we're talking about a 15-minute, that would be a 2% move. So you don't have a lot of room for mistakes, especially when the commissions are about 0.5%. So that will eat up like pretty much 1/4 if you have the best rate possible. So that's the first thing you have to understand. The second thing is that I didn't filter the bad signals here. I left every single signal there because this is a trading system where you realize that you can create several different types of settings for every single situation. This is meant for traders who actually want to trade, not people who are just looking for a signal or an alert. Because here's the thing, I still require you to go here and do the minimal homework. I know you don't understand the features yet, but just a simple and a stupid example that you're gonna learn is, okay, it's a simple rule, but I will only buy when the trend analyzer is orange and after some sort of strong bullish reversal. So as you can see, all of this area is red, you don't trade. Green, don't trade. Oh, orange, that's the area you should be worried about. Oh, this is, you don't know yet, but just trust me, this is a strong bullish reversal sign. So what you're waiting for is to enter on the next confirmation. Boom. So you wouldn't trade this one, this one, yeah, you would, because there's a, but I'm just trying to show you how I created a system within this trading system that I'm teaching you. that would remove all those bad trades and would get you a safe, let's see how much we're up. Sorry. We're up 10%. So if you follow this very simple system, it would give you a 10% trade, you know? So that's what I want from this system. I want the system to teach you how to look for the best setups. Because another thing that automation people don't realize is that one script doesn't solve it all. The market changes, every asset changes. So they don't understand why sometimes the numbers change so much. It's because they just think it's, you know, like monkey business, just click and go, but that's not the fact. You have to be able to look and understand the market, okay? So that's what this thing does. You see I have two screens here. First hint, I spot the trade on a bigger time frame because that shows me the longer trend, the stronger trend, you know, a broader view of the situation. And then I use usually a smaller time frame to get in the trade so I can actually get in the best time possible. For instance, right now I think we might be a good time to short. So I'm trying to realize the best possible price to short. I'm not gonna short right now because I'm actually doing this video, but I just want to see, you know, like the range with more information. Because first thing you have to understand here, one candle is 1 day. Here, one candle 6 hours. Therefore, 4 candles here is equivalent 1 candle here. So I have 4 times more information. Okay, that's always what I do. It doesn't matter if it's 1 day, if it's 1 hour here. I'm gonna do like, if it's 1 hour here, probably it's gonna be 15 minutes here. If it's 4 hours here, probably it's gonna be 30 minutes or 1 hour here. Do you understand the concept? One is for the, you know, the big view, and the other one is for the entry. And then this Kears chart here, it's our other indicator, which is actually a screener that gives me an overview of every single asset. Because here's the thing, that's another thing that most of the beginners and automation folks fail. It's that they don't understand that the strategy is just one piece of the problem. There are 3 pieces of the problem. The first is actually figuring out what you're gonna trade, and that's actually more important than your strategy. Because if you pick a bad asset, or asset that's stopping out, or, you know, it's just sideways, you can have the best strategy in the world. It's just you're not gonna make any money. Do you understand the concept? It's not moving. There's no volatility. You as a trader or as an investor, you're looking for change. You're looking for volatility. That's where you profit, you know? So if you pick an asset that's just sideways, doesn't matter how good your signal is, it's gonna fail. Okay, so that's what this screener do. This screener is actually monitoring 20 of my favorite assets that I've been trading lately. So the first chart here, the first 5 lines, they're tracking 5 different cryptocurrencies. You can see them here. I already know what line represents because I'm used to this. But for instance, the first line, it's Bitcoin. The second line is Binance, their coin. The third line is Binance Bitcoin. The fourth line is Tron, and the last line is Cardano. Okay, this other chap here, this is Forex, right? Euro, blah 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 blah. The third line, it's Nasdaq stocks, big chip, big companies, big capital, another type of behavior. And the last one, penny stocks. It's still Nasdaq, but a very different behavior, huge moves to, like if you're into crypto, my recommendation is you can only, you should never trade one market, okay? Because if the market's bad, you have no options. And as you know, kind of the market follows Bitcoin. So if Bitcoin is having a bad day, you know that pretty much everything else kind of suck. So you might want to have another option. So take a look at penny stocks, because you see that the moves are clear. I don't know, just take a look, right? There are commodities to futures, so many things you can trade. Those are the things I trade, right? So here, this is actually gonna tell me what I should be trading. Why I'm looking at Bitcoin? Because remember, this first line here, this is Bitcoin. You see, this is just entering on the oversold area. So I was just taking a look at it, like, hey, what's up with Bitcoin? Because that was a strong up move, which I was trading, so I kind of knew. It's just for the sake of the information. But you see, it's not only going up, but we see the first signals of maybe a reversal, but we have the orange background here. You see the background turned orange. You don't know what's that yet, but we're gonna get there. So that's the first indicator that the trend's about to shift. Okay, it could be a huge move up too, because if you look on the very big trend, we know that we're actually stopping from a larger downtrend. So that could be a very crucial moment if it's actually bursts and go up. That might finally mean that the cryptocurrency is on a bullish trend. So this is a crucial moment that I'm glad that I'm here observing. But let's say that was not a good time to trade. Actually, this is a good time to trade. This seems like a good trade. Doesn't matter the direction. Just make sure you have like you have a system. If it goes up, I would do this, this, and that. If it goes down, I would do this, this, and that. So when it happens, you don't freeze. Okay? So what I do, it's I screen through here and see what assets are in a good position and in a bad position. Because when I choose something that's in a good moment, I don't even need so much information regarding my strategy to make a good call. I mean, if you pick a good asset, you don't even need like all the informations and stuff. Sometimes you can only use the up confirmation and get in, or the down confirmation and short it. But my attempt is to maybe put this idea in your head that if you just buy a bot and follow a buy and sell signal in a stupid way, you're not gonna profit. Okay, understand that. Picking assets is as important as your strategy. Okay, so let's start from the start. I picked Bitcoin because it's in this area, but this one is not quite there yet, so I'm not gonna look. This one just recovered, I'm not gonna look. This one seems that it was going up, and look, it just changed the color, so it means that it's losing strength. Okay, so it was green going up, now it's becoming red. So that's an information that might be a reversal. So this is strong. What I do, I come here and I will type it, and let's see what's going on. Oh, so there was just a down confirmation. Look, this is a screening process for me. I didn't like this already, so I'm just not gonna spend so much time. Like, if you liked it, good. So this is a screening process. I don't want to spend a lot of time. This is good, this is bad, bad. I didn't like this too. This one looks bad. Oh, this one looks promising. So what is that? That's euro dollar. Good. So we go here, euro dollar, and take a look at it. Ooh, that seems a little more important. Big up run, just went down, it's bouncing back up. So if it fails to go up, it might seek for the next level here. I didn't really like it. I kind of missed the momentum, so I wouldn't trade it. But because I already found a good trade here, with a good potential, which is Bitcoin. So I'm not that picky right now. So I would just maybe, right? Why? Because usually I just want to engage 3-4 trades at once, to mitigate my risk. Because if I know my precision, so my average precision across markets is around 60 to 70%. So I know if I trade 4 times, it's likely that I'll get 2 or 3 right. And usually I win more than I lose. So usually my winners pay for my losers. And even if I lose 2 and I win 2, since usually I only trade things that my risk is smaller than my gain, I will still win. even if it's small, I will win. I just don't like to lose. All right, I really like the consistency. So the next asset where we should be looking, it's a yen dollar. Let's take a look at it. UPI USD. I don't know. Well, honestly, that could be a good trade. The up signal just popped up. It's kind of like the downtrend is stopping, you know. It's right on a support line here. Yeah, it's something that I might consider. Okay, so this is just an example. So I'm showing you how I pick my assets. You know, another thing that's important to see. Look how some markets, some assets, they look so different from others. Look, this is Apple. This one. Look when a steady company always remains on this positive area. It's always constantly growing. You see, this one is Amazon. So this is something interesting to watch. Okay, so that's the first thing I do. I screen for assets. What does screener mean? Unfortunately, we didn't get any very good signals right now. I mean, I cannot choose the market, so we're just gonna go through some signals, and we can understand what we're talking about, right? The things we want to see, well, we're on yen dollar, right? Yeah, good. So this line here, it's the yen dollar. This line here, okay? So first things first, the line. The line is pretty much a momentum oscillator. If it's going up, you know, uptrend. It's going down, downtrend. And the colors, they actually tell you the strength of the trend. So you see, when it's a light red, it's a stronger downtrend. When it's a darker red or a darker green, it's a weaker downtrend. Sometimes it's not even a downtrend. Sometimes it's just a correction. So for instance, look, this is a good example. And then there's the blue. The blue means strong reversal area. And if you observe, okay, so those graphs are synced. You see when I move the mouse here, it moves exactly the mouse here. And it takes some time to pay attention, but look, I'm gonna move, look, here. Look, you see how the blue area tells me exactly when I should be looking. So this is like the alert. Take a look that this is a mean reversal area. For instance, here we might have a mean reversal, but I also know it's Amazon. You know, Amazon, it tends to keep growing steadily, so it's something that I might want to do some research before shorting Amazon. Okay? So the first thing I want to show you is this. Every time you see the blue means high volatility, high uncertainty, reversal area. You see, like here. Of course, sometimes when things are too oversold, it happens. It's an indicator. It doesn't really predict the future, but most of the times it tells you where the best trades are at. So as you can see here, and you see, I just kind of picked the one that was right there. It's not like I chose it. Look, if you look at the other blue here, look where it happened. It happened right here. Look. So you see, it's really precise, and that's something that you want to look for. The blue areas, okay? The second thing that we're talking about is the difference of the colors. So you see this uptrend here, and then you see this long red, but you see the red is not a light red, it's a dark red. So this whole part here, you see how the price doesn't really go down? It's more of a consolidation, a correction, than a downtrend. Okay, so that's what those colors tell you. And that's very useful, as you can see. And then the very curious alpha and omega. I know that those weird things here, but those guys, they're pretty much a volatility indicator. When those things appear, usually it's it means I made it based on the Richter modeling, you know, the thing that identifies when earthquakes are going to appear. So it kind of tells you when you might expect volatility in the future. So if you have an alpha, it means that things are going to be shaky from now on in a positive way. So if you get an alpha here, it might seem that we will see volatility, and the trend of this volatility is a positive momentum up. So you see it appears kind of here. And as you can see, the next move goes up. Remember, it's for the future. For instance, let's look the other one here. This is a very good example here, and let's just talk about something else. You see those curious things here, like those things here and those things here? Okay, so those things, they are the X confirmation algorithm. They are in Spectro, but this is likely, I changed it so it works a little better here for this specific purpose. But what is this? So this is basically Spectro reading 10, 15 indicators, and when all those indicators agree, stochastics, RSI, DMI, MACD, MFI, when all of them agree, when there's a massive agreement on the price, that's when those things pop out. So if you have those things here, it means that the RSI, the blah 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 blah, they're all oversold, and here they're all overbought. So when you see something like this, okay, you have the bullish indicators telling you that's oversold. You have the blue line, and you have the alpha appearing. I don't know what's up, but I bet you that this trade is good because you have all the stars aligning. So I promise you that you don't even need like a very fancy system right now. I'm pretty sure that just with Spectro, you're gonna make an amazing trade out of this. So let's take a look at it. This first line, it's euro dollar, right? So I come here, euro dollar. Oh no, sorry, I have to click on the right. Euro dollar. All right. And let's look what. All right, look. Do you see where it happened? Look at this thing. Look, it happened exactly here. So as you can see, this pretty much forecasted the best trade possible in this chart. Literally the best trade possible. So if you trade like me, I'm a conservative person, that's when I trade. You know, like if I don't have a setup as good as this, I just keep looking. I just keep looking for different assets. So I tend to trade a lot less. You know, you see how picky I am? Like if I see something that doesn't look good, I just go for the next one. And then if there's nothing that really triggers my, intuition and my gut, and, I could deploy my system because sometimes they fulfill the requirements for a technical entry. But if they just don't look good, I just don't trade it, So that's the first thing that I would like to explain is the momentum oscillator, the screener, because that's what tells me what I'm gonna trade. Okay, and it's, as you can see, it's like super easy to read. I already pretty much covered every single thing that I had to cover. That's how you change the assets you're looking. You pretty much type the exchange and then the ticker information, the asset information. We're using the advanced mode. I'm gonna show you how the simple mode is. It has just a lot less information because sometimes some people just prefer it. So as you can see, it doesn't have the momentum oscillator, but the colors are pretty much the same. When you see blue, it's the alert. Remember the blue reversal area? So this gives you more time. Let's say you already have your strategy, you already have your system, you just want a warning, when to look because you already have your thing going on. You might want to use the simple mode, the flex mode. So, less information. Sometimes less information is better. And the green balls and the circles, the green circles and the red circles, they are the X confirmation algorithm. It's like when all the indicators agree with each other, remember? So they're actually like a stronger bullish or bearish signal. So I don't have to know that this is a bearish movement. So this is a dollar Brazilian reals. So let's take a look at it. USD BRL. There you go. Yeah, as you can see, it's the bearish signal. So it's after a very up run, it's, there's bearish pressure down. That's the same thing I'm telling you. So here it's a bullish area, bullish signals. It's a pound dollar. All right, pound dollar. Oh, wrong. Oh, another thing that's important to tell you guys is the screener you always want to run on those assets, okay? USDT, USD, any of them, okay? Why? Because there's a bug on TradingView platform, I already told them, but literally this chart is interfering with the studies. I can show you the the report and everything. It's not on our code, they're working on it, but there's a very simple way to avoid it, which is just select an asset that's always around 1, so the noise is pretty much 1 all the time. So just select one of those USDT, USD, and you're gonna be fine. That's the tip. If you run it on a different asset, those things are gonna go crazy, okay? So pretty much that's it. There's not much to it. Those things are meant to be fast and simple. And now we're gonna go into the more robust signal, which is actually what teaches you and helps you to trade with this Spectro indicator, okay? Just another thing that might be good to talk about, it's the look back. Look back is pretty much the amount of bars that the indicator is using to calculate things. So more bars is lower the behavior is, because the average considers more numbers. So 1 bar means a lot less in 100 bars than in 3 bars. So you see how the moves, the waves here are a lot less aggressive than if I do this, for instance. I'm gonna just do 5 so you see what happens. This really changes in between, like what's better, depends on what you like to trade, but the settings that I left there already, it's what I believe to be better, overall. So just change this if you actually know what you're doing, otherwise you're just gonna find yourself, losing a lot of time. And then another tip, so you know what to type here, it's pretty simple. So there are 2 ways. Either you click on the candles itself and you click symbol info, and it's gonna be right here. Or sometimes you misclick the candles and you click just the background. You can do object tree, and it's gonna display also the full name of the asset. So that's what you want to type to keep track of it. That's the first part, good to go. That's the screener. So let's keep exploring the trade that I was about to do, so we can get to the same conclusions, and we can analyze it together, and we can go step by step, revising all the features that Spectro has. I'm gonna just zoom in right here so we can take a look at it. Right now we have a few things turned on, okay? First thing I want to tell you guys that I have I like to keep things simple. So when I'm trading, I look for 3 things. The first thing is direction, I think for obvious reasons. The second thing is momentum, and the third thing is price levels. Okay, that can be a little technical. This we can see like where it's going, right? Up or down? Should I buy or should I short? Should I long or should I short, right? And momentum means how long is just gonna keep going, How long? How far am I from in the start of the trade, in the beginning of the trade, or am I at the very end of the trade? This is very important. And price level is like where stuff goes up. That's where you have to pay attention, because those are the warning signals that the price gives you. So if you breach a price level and the price is looking for the other level, your stress levels, they can relax a little bit, because you're not in a warning area, you're not in a conflictuous area, an area where people are gonna ask themselves, is the price going up or down? That's why it's important to know where the supports and the resistance are, because those are areas that the psychology, the whole market starts to get jumpy and watch everything closely. So those are the things that I always look for. And this whole system is based on telling you how to read those things in a very, very easy way. Okay? Right now, it's pretty simple to understand direction. I mean, up and down. I think that's as easy as it gets. But also you see that the up and down, it's kind of a micro movement. The first thing you have to understand is that those up and downs, they not always tells you the big movements like this. This one would require more skills. If you just follow the signal, that would be a good trade. I mean, from here to here, that would be a good short, like almost 20% profit. But if you're smart enough, you could write it all the way down here or here. I don't know, you know? How? With the extra information. If you just read the ups and downs, that's what I'm telling you. This doesn't make you a good trader. This doesn't give you anything at all. And that's why I didn't want to create an automation version, because this thing here is meant to help. It's meant to teach. And what's the point of just eliminating all of this and give you something, you know, that took me years to do? And why would I rent it for $49? Do you see what I mean? I mean, it's very simple once you create the rules, like orange background, this thing, this, that. A lot of users come to me and say, hey, but look, if I follow those rules and if I just erase all the other signals, it's just so much easier. Why don't you erase the other signals? Because I don't want to make it easy. I want to make you realize how to filter those signals. Because when you know how to filter those signals, with time, you don't need Spectro anymore. You see, this is, I hope that you don't use Spectro forever, even though some people get kind of addicted to it. But it will teach you not to be dependent on it, because it just kind of make your mind look for the patterns, okay? So the first thing we're going to talk about is the ups and downs, which is the Spectro indicator itself, okay? Let's, I'm going to turn everything off and then we can go step by step so you don't get overwhelmed, because I know it's whoa kind of thing. So let's start from this start, right? Which are the ups and downs. It's the first field here. As you can see, like most of our features, we have the aggressive mode, moderate mode, and conservative mode. It really depends on what you want to do, but pretty much aggressive, you're gonna get more signals. You see, just pay attention to this area here. So you're gonna see it very easily. We are on the aggressive mode right now. And then we have the moderate mode. Boom. Right? It filters a lot of noise. And then there's even the conservative mode. Here doesn't look so good. But look at here. It's just you see my eyes are kind of used to look for this. So moderate, conservative. See? So you have to play around. And instantly, your eyes are gonna tell you, oh, this looks better. I'm getting a lot less signals. For instance, the conservative mode is the only one that you can make less or more conservative. I like to do 10. 10 usually works great. You see 10? It's not looking so bad. It's filtering a lot of bad signals, you know. It's giving me decently good entries. So, you see, it's not so bad. It's as simple as that. Now, in order for you to understand what it does a little better, you have to understand where those signals come from. And they come from this. This is the brain behind the Spectro, okay? That's how Spectro thinks. If you want to know exactly how the indicator works, go to the knowledge base. I explain exactly how, you know, I made this whole algorithm kind of. But let's just understand, because now I'm teaching you guys how to come up with your trading system, how to identify patterns, and how to trade. So I'm gonna focus on that right now. So I want you to look the difference when I change the modes here. Aggressive, boom. You see how jumpy it gets, how reactive it gets. Moderate, a little less, and then conservative. You see now, all the moves, they have less peaks, you know. It kind of filters the move out. So what changes? It's the speed. when you're trading fast moving assets, let's say you're doing scalps in 1 minute leverage, you want to use aggressive because you want to get in as fast as you can. You want your indicator to be as reactive as it can. You see the point? But if you're trading on a daily chart, on a weekly chart, which is something that I've been doing a lot lately because I don't have a lot of time, then you might want to go with the conservative one, because the conservative one takes more time to change. So when you get a signal, usually if you did your homework right and you filter it right and you know it's close to a reversal zone, when you get that up signal in a good area, that move tends to be a lot longer. So you expose yourself to less risk, to less trades, okay? So that's how you do it. And then if you change here, just for the sake of, I'm gonna do 50 so you can see how, it changes a lot. I'm not saying it's good, I'm just trying to show you how it works. Another thing that I like to do, I like to run on conservative, and then there's the direction change warning. Those things are amazing. Why? Because they save your life so many times. Let's study one big move and then one bad move. So let's study this move here, which is amazing. Well, the last two trades were very good trades, so we can take a look at them. The warnings, they don't always appear, but when they do, they're much faster than the ups and downs. Okay? Sometimes you see, you're getting here you didn't have a warning before the down, so that's why you can not always use the warnings. Also, the warnings tend to fail. For instance, they're weaker signals than the downs and the ups. So sometimes you can get a warning and then it reverses, like here. Okay, so, or here, that's a good example. You got a warning, but then boom, it went to the moon. So you have to be conscious where you're buying. Like when you're getting a warning down here, like on a all-time low, it's much better than a bullish warning in an all-time high. You know what I mean? That's what I'm trying to say. Like if you just stupidly follow the signals, you're not gonna think. And thinking it's important. Trust me. Okay. So the warnings, they appear a lot before. So if you're trading a bigger account, that gives you a very good point to ladder up. I love using the warnings to ladder up. Usually when it's close to I'm gonna trade it and I'm sure of it, usually one of my first entry signals, it's the warning, depending on what kind of trade I am. But if it's a daily thing, it's a slow moving thing, a consolidated warning for me, it's what I like to trade. Which brings me to the another thing. I said consolidated, right? Because I didn't turn off the repaint. Why? Because the signals, they appear in real time. So let's say you have an indicator that when it crosses this line, it's oversold, right? Like RSI. So you can have a script that tells you like, hey, it's oversold. Every time that it's, oh my God, this is oversold, I swear to God. Okay, displays plus when it's oversold. But you have to remember, this is real-time stuff. So there's a line and the price is going up, 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 and then it gets here and it stops. And it starts going like this. What's gonna happen to your signals? You're gonna go crazy. And there's nothing you can do about it. Because that's how the computer thinks. If this crosses this line, this happens. But if you're smart, there are two ways. Usually, how you avoid it by automation, it's to wait for the consolidation. What is that? So you have a warning and it's blinking, it's repainting, how the automation people like to call it. They're the only guys who said that, like, because they're not really traders. I'm sorry, but you're not. So when it starts to blink, it means that the condition, it's touching that line. What that gives you extra information. It means that it's not a clean cut. The move, it's uncertain. It's one more information, but it's a lot faster than if I I can turn on the non-repaint mode, which is pretty much like, okay, you wait until the bar closes, so I get a confirmation. The problem is that in order, sometimes this warning appeared right on the bar open, but if you're waiting for the bar close, you're only gonna actually act on this warning here. So because of your lack of technical skills, you're gonna lose 5% of the entry because you cannot make a decision on your own. You see? So I had to think about it. I made this tool for traders, people that actually make decisions. And I can't sacrifice 5% for good traders because people cannot trade, you know? So that's why the reason I leave the repainting mode on. Because when I know it's gonna reverse, man, I don't wanna wait. You know, when the thing, when I chose the asset right, I know it's a good reversal area. And it starts blinking. I don't wait much. I already buy because I know how my system works. And after you do it 100 times, you know the percentage. You know that you're likely 6 times out of 10 to work out when you buy under those certain conditions. Like you have the X confirmation on, you have the Spectre clouds on, it's a orange background, blah, blah, blah. Okay? So those are the first things that I want to explain it to you. The warnings also come from this this interaction from the Spectro oscillator and the price. The rules of the warning are a little more trickier, so it's kind of hard to explain. But you know, they're kind of like when the trend. Another important thing is realize when the price is too far from the indicator, it tends to correct. That's another very important thing. When the price grows close, you see, to the line, it's not very it's a strong move. It's an organic strong move. But then when it's far like this, you see it kind of stops and corrects. And then when it gets close again, it keeps going up. And you see this is a natural move. Look, it was close here to the spectral indicator. You see how it keep growing, 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 and now that's getting far, it's starting to correct. Why? Because the way spectral indicator was made. Okay, it compares the move to past behavior, and that's more or less how it should grow. And then when it gets out of the organic, the healthy grow area, you start to see those anomalies. You know. Also, those things are very good signals for entry points. So you know you're getting close to a very strong support, and then you see the price all the way up here. That's when you want to start shorting. Because you see, let's say you short 33% of your position here, and then because of your trading system, you short 33% more on the warning here, and then 32% more here. So your entry price, your average entry price, is actually really good. So you see, it's all about reading the patterns. Look at the amount of information this indicator is giving you. And this is just the first feature, man. Okay? So let's move on to the next feature. I'm going to turn off the oscillator. Oh, no. Another good thing. Very, very good call. Another very good thing, it's you can set the oscillator in different time frames. So you can never set an oscillator in a smaller time frame because it doesn't really work so well. You know, it doesn't make sense to the indicator because you can only show at least one day. So you can't show like 5 bars inside of 1 bar. Does it make sense? It's like the way the charts are made, you cannot display it. So you can only display longer trends. So I'm gonna do 1 week, and I'm gonna show you the difference between the week graph and so you can kind of understand here. So I changed it to moderate, and now you see use current spectral time frame. We're using the daily one. Now we're gonna use the weekly one. I turned it off. Boom. So this is the weekly trend. If you see, the moves are far bigger, but sometimes they're not so precise. Okay, so if you get the last short, that was 16%. Why is this good? because at least here, if you're longing it, it means that in a week we just had the warning and the up signal, and oh, that's nice. You see, we're just getting a reversal here. So in a weekly standpoint, it means that we might be actually looking to a longer, bigger reversal. Okay, remember that we're like, oh, this might be where it goes bullish. Look, when Bitcoin was bullish, this line was forever green. Look, the last time Bitcoin was red, you can even see it. Okay, so now that we're on the bearish area, you see, like, if you're smart enough, if you had this indicator, you could have been holding this for a very, very long time, because pretty much it was bullish all the way along. You would, yeah, wouldn't be so good because you would sell it around $8,000, but God knows how much you would pay for it. Apparently less than $2,000, but yeah. So just a funny fact to show how this can work. So let's say you're trading 1 hour, you know, just for the sake of it, and I want to see the, I don't know, 3 hours. Okay, so this is the 1 hour, but the Spectro oscillator, the signals you're getting, it's from the 3 hours one. So you're gonna get a lot less signals. That's another way to trade. You know, you can use like the 1 hour chart with the 2 hours or the 3 hours Spectro, and you can get in the warning, because the warning is stronger than the 1 hour for obvious reasons. Okay, let's keep going so you guys don't lose focus. I told you this is gonna be a long video. You might wanna pause, drink some water. I already gave away my humanity. I don't need to do this stuff anymore. So next step. The next step is the Spectre clouds. Okay, let me turn this off just to keep it simple. The Spectre clouds, I'm gonna leave them on the aggressive, even though I like the moderate better, but just for the sake of the result. The Spectre clouds, they're a curious little indicator that it tells you when the price starts to grow more than it should, and where it should go back to, and when the reversal starts to happen. That's a lot of information, right? So first thing first, that's the interesting part. This is Bitcoin. We're gonna analyze this from a from a very long period, so you can see how it kind of works. So let me get a. Okay, so the first thing first. This is the Bitcoin boom to $20,000. Look what I'm trying to say. Those funny little things here, you know, sometimes red, sometimes green, sometimes yellow. They're the clouds, the Spectre clouds. And I'm just gonna do something here, and I'll let you figure out what I'm trying to say. Okay? Just pay attention what happens to the price after some time. After those clouds appear, usually what happens with the price? Look, I think you already start to realize a very good pattern. And look the accuracy that this thing has. Every time that I look at this, I'm proud of myself, man. This is one of the greatest things I've ever invented. Especially because it's so simple and the precision is just insane, man. Ah, there you go. Those are fake. You see? They point to nowhere. So, fake. This is a okay signal, but let's count it as bad. This one works here. Here. Let's keep going. I think you guys can already understand what happened. Yeah, it's kind of a little off, but I'll tell you why. So the first thing you have to notice is that this thing already kind of predicted that Bitcoin was going to crash. And it did not only predicted that it was going to crash, but all the price levels it would stop. And it literally got every single level right. That's it. I don't have anything else to tell you. It's right there on the graph. And if you look to other assets, it's going to be the same thing. But let's just keep here because Bitcoin has some really big moves. It's easy to study the indicator, and I'm pretty sure that things are gonna trigger, and we're gonna have good examples of what you should do and what you shouldn't. Okay. So that's the first thing. The first thing, it predicts where the price should go in the future. That's as simple as that. And as you can see, it gets the price right with a stupid precision. And this is the aggressive mode. The aggressive mode means that it triggers more often. It's the requirements for it to trigger, it's not so conservative, you know. It's more likely to give you fake signals. If I trigger the moderate mode, you're gonna see that many of them are gonna disappear. You know, you see, but also it's gonna clear a lot of, you see, it cleared a couple of bad signals. And then there's the conservative mode that, you see, this one actually got rid of most of them. I like the moderate and the conservative one. Why? Because when they appear, it's very, very likely they're gonna be right. You see, when I turn the conservative one, it's 100% precision. Every single one that appeared on the conservative mode, like this one, the one on the crash, this one here, this little one here, they don't appear often, but when they do, they have a very high precision. And that's as simple as that. That's what the Spectro clouds do. And then you see that the cloud goes yellow. That's pretty much when the indicator tells you, hey, this is the end of this warning, and the adjustment, the correction, the reversal might begin soon. So the yellow area can also be a very good entry point. I don't like to use it so much because of, you know, sometimes stuff like that happens. But that's a way to go. Like, if you see here, if we study what we have on the graph here without being very picky, this yellow here, this yellow here, this yellow here, this one is bad, this one is good. So you had pretty much 3 out of 4. Not bad. I just don't like it. I don't use it a lot. I just use to know where the price might go. That's how I use the Spectro clouds a lot. And that's what they do. Okay? So now let's go to the next thing, which is the X confirmations. I'm going to start on the aggressive mode, and you're going to see what they do. So you see all those little triangles that appeared on the bottom, and okay, so here and well, pretty much everywhere. So what those guys are, they're pretty much this. Most of you guys use other indicators with Spectro, all of you. So what I did is this. Most of you are using redundant indicators. Most of you guys are, reading 3 indicators that tell you the same thing. Remember, you have to know direction, momentum, and price levels. Why do you need 3 momentum indicators? Why do you need 4 pivot styles? Why do you need 3 mean reversal indicators? So I made it simple for you. This algorithm reads all of those indicators for you, the most common ones, RSI, stochastic, Bollinger Band, blah blah blah, and when they all agree, it plots you a signal. The reason I kind of got them all together is because those indicators are so bad and they're so laggy and they're so far off that how many times that an RSI or a stochastic gave you a false signal? You see, they're not so good. They're not so precise as the new stuff. So when they all agree, it's a little less bad. But still, as you can see, it's not good, man. But calm down. You see, this is bad here because we're on the aggressive mode and we're on the daily chart of Bitcoin. Why I'm saying that? It's because another big warning for all you guys that only trade with technical. Numbers without context are madness. How many times in your high school you're learning, whatever equation, you're like, man, what the fuck am I going to use this for? Up to this day, you have no idea why you learned some stuff. That's what happens when you try to use indicators out of context. It's not the RSI and the stochastic, they're bad. They're kind of bad, but also you have to understand when to use them. And also to understand that they're just numbers. You know, they cannot forecast, and they cannot understand that you're going through one of the biggest bubbles of the 21st century, which is the, you know, what we're looking at. So you can look, just one stupid example, stochastic, okay? Check it out. When the stochastic, you know, when we see this huge spike up, which was the huge bubble when it's burst, the stochastic went crazy. You know, like, this thing was going up and down at the same time. It was just so hard to get a good signal. Let's RSI. I'm just going for the popular ones. You see, it's kind of hard to know, like, if your strategy is like, okay, you sell when it's going down. I mean, it could kind of work, but you see, all of this time here, you're being on the oversold area. And I know that once you're trading the chart that is done, it's easy. But at this time, every time that the price is dropping here, 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 you have to think that as you're there, you're gonna get false signals. So you might be, you know, trying to enter on good points here, 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 getting a bunch of false signals. Or if you have the crossings on the stochastics here, here, so many false signals, you know. So what I did is to read all of them for you, and when they agree, you get those things. The aggressive mode reads less indicators, therefore it appears more often. Why is it good? Daily one, like I said, this context is not good, but maybe if you're scalping on the 1 minute range, they might be a lot better. You see, it's just a simple thing. Let me turn off the warnings because it gets a little. You see, the warnings on the minute one, they're not so good. You know, sometimes on the minute one, especially because you see there's not much volume on this one here. Let me just get the one that I know that they have volume for this kind of stuff. Okay, it's gonna look a lot better for you guys. All right, because this is futures, and I know for a fact a lot of people trade on the minute one. So as you can see, there's more volatility, there's more liquidity, and that's what happens. You saw how the price was, the chart was choppy. It's lack of volume, it's lack of liquidity. Okay, so first things first, let's talk about the triangles. You see, now the triangles, they're not so overwhelming, and they actually tell you some damn nice trades. Look at this one. This one's like the best trade ever. Those ones not so good, but still, you know, especially when we're talking about, you know, leverage, we want to know when to get in. For instance, this is a trade that I would do. Look, you get the Spectre clouds. Look, once again, they forecasted the price amazingly. You get the clouds, you get the triangles going on, you get the up signal plus the yellow thing. Man, I told you, it works. Here, Spectre clouds with the triangles again. Worked. Here, Spectre clouds, hard to see. I already have my eye trained, but that was a very, very good short here. Look, the Spectre cloud here. And the price. So it's all a matter of context. That's why I don't want to give you a, you know, like filter it for you, because then I would kill this amazing tool that's meant to work in every single thing you want to trade, because a couple guys are lazy and they cannot think a little bit and come up with their own strategies. They just want to click a button and do it for them. This is not for you. This is for the guys that actually want to trade and sit and come up with trading strategies and make a lot of money and getting the best entry points. Okay, so let's keep going and see the difference between the moderate mode. You see some of them disappeared. Let me get rid of this for you. There you go. And now let me go back to the aggressive mode. Boom. See all of these ones, you get 2 here, a couple here, pay attention now. Moderate. Oh, you see? But now, they tend to appear just on the bottoms. Look, very good signals. Here, here, here not so much, but still, a lot better. Once again, let's do conservative. Boom, gets rid of even more. So the difference is that the aggressive just check 10 indicators. The moderate checks, I don't remember exactly, 12. And the conservative, it's up to 20. So that's the difference. And you see here, this is a good example of how you cannot fully trust on technical analysis only, because when you see stuff like this literally means that several indicators are giving you false signals all the time. You know, so TA without conscious thinking, it's useless. For instance, let's go back to the daily one. That's what I wanted to show you. You know, you're gonna get all of these crazy warnings here, but you see, you have to understand what's going on. Even it's not so bad considering, you know, it was one of the biggest bubbles that I've traded in a very long time, and you just got a few signals, you know, bad signals, but still, every single indicator will tell you, like, no, this is so wrong. But even though all the indicators were telling that you should reverse, those indicators were wrong for more than, 5 days. They were 5 days. I wanted to see you 5 days looking at every single indicator in your TA kit telling you, hey, you should sell. And the thing is going up and up and up and up. What would you do? So understand the context. All right, let's go to the next thing. The next thing is one of my favorite things, especially because I like to trade in a simple way. So I use this more than anything, pretty much. Remember that we look for 3 things: direction, momentum, and price levels. So direction, with the Spectro indicators and the direction warning alerts and the oscillator, and also the bullish reversals and the specter clouds. In terms of momentum, you get the spectral oscillator. Remember, when it's too far away, when it's close, when it's crossing, or if you get like some specter clouds appearing, it's the end of a movement. There's another thing that also reads momentum and direction, which is the trend analyzer. Let's go to the trend analyzer first. The trend analyzer is as simple as I told you. It tells you what kind of trend you have. So the one I use a lot, obviously, is mine, the Spectre TA. It has a special thing, but as you can see, it uses a lot of data. So you see that it only starts working here. It means that it kind of gets like more than 300 bars, back to start working. So that's why you need to use it on charts that have a lot of historic data, because this indicator, this trend analyzer, it doesn't analyze, it doesn't consider time. It only considers price change. So when you have a sideways market, pretty much it keeps reading, So that's why it requires a lot more data. But as you can see, it's really good. And let me tell you what. First things first, if it's green, it could be a bullish reversal. It should go up. If it's red, it should go down. It's a downtrend, But what you wanna look, there are 2 things. If you're in the trade, if you're investing and you just wanna, keep sure that the things are going the way you're going, I wouldn't use this one. This one, it's when you wanna find volatility, because the orange areas, they are the warning areas. They are the ones that they analyze all this price change and they tell you, hey, there's something really weird. We have found a price anomaly and something will happen. So after those things, usually a big move happens. As you can see, we have 3 ones. One starts happening here, one starts happening here, another one starts happening here. Okay, that's not the normal Bitcoin that we're watching. That's futures. Okay, good. So let's go back at it again. So the first one appears here, the other one appears here, the other one appears here. All right, and now if you realize it, we're getting an orange one. That's why I'm telling you, I was trading this. So this is a very big warning sign for me, because you see what happened when the orange appeared. So I'll keep my eyes on this, you know, first because I have an open position, and second because it appears that whatever comes next is something that's, you know, worthy paying attention to. And that's as simple as it is. That's the first trend analyzer. Let's analyze the other one, which is the scalper one. I love the scalper one. So this is the core, the algorithm that we use in the momentum oscillator, you know, when it shows like the uncertainty areas. It calculates uncertainty. So just, it's as simple as that. You see when the background goes blue? Here, 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 and here. I think that tells you everything, right? Look what happens after. So that's another sign, you know. You might just want to trade when you have, let's say, you get a few up signals, and then you get like, you know, and this is a good example here. This is a very good example because it fails. I would trade this, I would lose some money, but then I would make a lot of money. And it's important to understand how you would have, you know, a system. Because here's the thing. You get the X confirmation, you get a very curious cloud here. I probably wouldn't lose money here because you see the cloud kind of stopped here. So I know it would be a short trade. I might not want to trade that. You see, it's kind of, I wouldn't trade this. It's, you see my point? Because the upside, let's say I start to get here. So I know that my potential trade is here. It should go up here. Goes down, it starts reversing right here. Yeah, it's not so bad considering it's daily. But you see, you kind of, it's a hard entry. It's a little confused. I don't know if I would trade this. You know, it's different after a big move like this. You want to trade after big moves. Like you have this, you have this huge fall here, and then you get a blue one. That's when you want to trade the next up. You see what I'm talking about? You have this huge down, and then you get the Spectro clowns going all the way up here. You get those warnings, and then you get the, you know, that's what you want to trade because you have a bigger up. Once again, you have a big up movement, then you get this. You might want to trade this. You get a huge down movement, I would trade this. But this one you would make actually money because you would enter sometime here, right? And then you would probably get down. You could get out at the down, so you would actually make 5% here. This one you wouldn't trade, right? This one probably I would trade too. You would still make some money here. And this one, yeah, I would probably trade it too, and you would actually make some money here too. You would make like 4, 3, 5%. This one, I would not trade because I wouldn't see it coming. As simple as that. Considering this strategy that we're playing right now. But we see a huge up movement. We get the bearish indicators, and then we have the blue thing. This one we would get because we had this, and now we're ready. We're waiting for it. So we short it. Okay, that's another strategy. That's another way to trade with this baby. Okay, let's keep going. The next one, it's the, I think this is one of the best ones if you want to actually, you know, find good trades and find stronger trends and stuff like that. We already have like some custom settings going on, but this is basically a MA crossing. Okay, the trends, they're analyzed by pretty much 2 MAs when they cross. So you can play with the numbers here, and this will tell you pretty much, like, are we in a bullish trend, or am I in a bearish trend? Now I'm pretty much calculating the trend by a simple exponential moving average crossing. As you can see, we offer 7 different types of moving averages here, so you can just have a blast. And I know a lot of people, they have their own MA crossings. That's why we left the custom MA crossing trend analyzer, because that's just a simple way for you to see what your MAs are telling you. If they cross, they change color, so you don't have to have all those lines and annoying things going on in your graph. So it makes your analysis a little faster. All right. And also the cool thing is that you can actually use different time frames for it. So what I'm talking about, let's say I'm trading the 1 minute thing. Let's go back to the futures. Let's go back to the future. Okay. So right now we're analyzing the trend here. Very stupid way to trade it. I don't like to trade this. Honestly, I think trading MA crossings is like suicide, but if it goes red, you short. If it goes green, you long. All right. I think this is as stupid as it gets. But a lot of people like to, filter. If you're in a downtrend, you never buy. You only short. And this makes sense. Look, if we analyze the downtrend, this red section, you see that the shorts were much stronger in general than the longs. And in the same way that here on the green section, the long was stronger than the, and you can see that this repeats in the past too. Look, green, red. Okay, that's why we say like always trend with the trend, never against the trend. So what we want to see now is this. Just like the Spectro oscillator, we can use different time frames, and this is actually very useful because when you're in the 1 minute, you want to see the trend on the 5 minutes. You want to see what the bigger trend is telling you. So I come here, the 5 minutes, and instead of using the current time frame, I turn that off. And now you can actually see what 5 minutes look like in terms of trend. This is actually quite useful. Like look, right here, you had a very strong uptrend. And if you observe the up movements, they were bigger in general than the down movements. And as you can see, in an overall term, in an average term, it started in a lower price than it ended. So actually, the total variation was positive. If you see this was actually a fake signal, but stuff like that happens. Technical analysis. All right, that covers the trend analyzer. I'm gonna shut it off just because to avoid some noise. Let me go back to the daily one because that's just less crazy for you guys to understand. Oh, daily. All right, there you go. And now, last but not least, my favorite function, which is the auto pivot system. Right now we're offering 4 different ones, which were pretty much the most responsive, most effective ones that I could find. I know there are other types, but I believe that some patterns like Fibonacci and patterns that you find in nature, they tend to repeat themselves because simply the universe has been built on those patterns. It's not like you're gonna change them now, and they're actually proved to work time after time. So I chose Fibonacci for this specific reason, because it's far more responsive and it takes in consideration the context more than just other types of a pivot system. And worry channels is something really good that not many people know, and they're actually really good. So everybody loved it. I included it. So let's start with the adaptive one. So the adaptive one, you see here, it has the look back period. It's analyzing the move from the last 60 bars. Okay, so pretty much what it did was it found from this moment to the past, it got like the lowest low and the highest high in those 60 bars, which is all the way here. All right, so you see, this is the highest high and this is the lowest low. And then the system already calculates everything else for you. This is very good when you're trading shorter trends, which is the case for most of you guys unless you're investing in an asset for a very long time, because it kind of takes in consideration this day, the trend in the last 60 bars, which is the last 2 months. That's, you see, the context is better. When you read too many bars, sometimes the context is not so great. You're reading information that doesn't really match with the present. So if let's say I do 200, just for the sake of, let's see what happens. You see, now the lines, they're not so, you see that they're kind of fuzzy, they're kind of not really, they're still getting right, but they're getting just bigger movements, And sometimes you don't want such big movements, especially on the daily one. So I already left a number that I think it's fine, but it's important that you understand context. So that's what the adaptive Fibonacci does for you. Pretty much it keeps calculating, whatever you are. So it's pretty straightforward. It's really good for scalping or day trading or swing trading. When it comes down to day trading, I actually like the full Fibonacci because this algorithm only reads, this last move. Whereas the full Fibonacci gives you a more in-depth view. It takes in consideration more information. And as you can see, it looks a little different. All right, you see it loaded. You see how it has a lot more levels and a lot more information, and it kind of starts from the moment that you are and then considers the past and the future. So as you can see right now, we're in a very, very strong resistance area, and this is dangerous. I mean, if it goes up, we're talking about, a 8% total move. We would probably just trade the middle, so we're talking about 5%. But here, if it goes all the way down, we're talking about 6 and probably even 11, which is something that I don't think it's impossible considering the big bearish trend that we're coming from. You see context? That's important to understand. Okay? As simple as that. Like, it's pivot levels. It's where the price might stop. Remember, we're talking about the direction, momentum, and price levels. It's basically those lines. They tell you like, hey, pay attention here. This is important. Those are levels that the price tend to change behavior. So you want to be close to your computer when the price is arriving close to those support lines or resistance lines. And like everything else in Spectro, you can change I know the lines sometimes they can be a little too thin for you guys. It's just I have a big screen, and I know that can be sometimes a problem for you guys. But you see how easy I can increase the line width. All right, and you can change the colors, you can change the styles, you can change whatever you want. You just go in there on the format area, go to style, and you can change whatever you want. You can change the colors, the size, blah 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 blah. I just changed it now so you guys can see the lines a little more clear. And look how precise they are. How much the price actually respects this a lot. So let's say you actually decide to short this. You know that your target is here. This is crucial information in order to calculate your risk reward, your risk exposure, how much money you're gonna buy. If you ignore all this stuff, you're not trading, my friend. You cannot just buy up and just buy some cash when when you think it's gonna be a reversal. You see, there are other things that you have to take into consideration. Do you think it would be really that easy to become rich online with a couple clicks? Why why everybody doesn't have a Ferrari? You know what I mean? So we kind of covered all the the basic stuff that we offer. All right, all the oh, and all the, of course, the Bollinger Band Fibonacci ones. This is a more dynamic type of thing. I know they kind of look ugly now because I made the line width pretty thick, but this is also another very good way to trade. I mean, let's just look the last time the price have been on the buy area. Look, and also the short area, and then here a few times. All right, that's another way to trade. Here, look how simple it is. And cross here. There's another. Oh, cross here. Good. Buy again. Didn't cross. Didn't cross. Cross. Buy. You know. Then whoop. Crossed. Buy. Whoop. There are several strategies within the strategy. Or you can do like, oh, I only buy after I get a bearish signal inside the green area. So I would buy a little here, and then I would sell here. I would buy some here, then I would sell on the down here. So you would have made 2 profitable trades. So literally there are hundreds of trading styles and trading systems inside of one indicator. So it doesn't matter what you trade, I'm pretty sure you can build something that's gonna work in a very easy way, a very strong and solid trading system that you can pretty much develop in a day. You don't have to spend hours and days and weeks, you know, with data analysis and looking for the best indicators. You already have the best of the best all in here for you. You know, now let's look at the Murray channels. This is a very nice thing. It's also a dynamic system of they adapt with the price a lot more than the other ones. And also you can do the same thing. Look, you can short here, and then you can, you know, accumulate here. Same thing here, accumulation zone. You know, short here, accumulation zone. Boom. Accumulation zone. Boom. So it doesn't really get much simpler than this. Of course, there are several ways you can trade it. You know, crossing the center, bouncing. It's up to you. You have to look what you're trading and see how the patterns look like. How the, you know, because each asset, it's gonna interact with this indicator in a different way. Maybe this is working good for, you know, Bitcoin, but might not look good for Tesla. Let's look at Tesla. I don't know, might look good. I really don't know. Let's wait a sec until it loads. There's a lot of mojo there. Oh, that's kind of crazy. And a good thing is, you guys from crypto, sometimes you just want to trade crypto because you think that you can make money with stocks. I'm just gonna show something to you. Look at this range, my friend. This range is as good as crypto. We're talking about 30% moves. So, you know, you might want to keep your eyes and your mind open. Well, yeah, pretty much this works the same way. Distribution zone. Oh, didn't really reach here. Yeah, accumulation zone. Look, boom. Distribution, boom. Distribution, boom. Distribution, boom. Distribution, boom. Yeah, actually. Yeah, accumulation. That would be a dangerous one. You might have to double down. But we're just kind of showing to you. Yeah, this one would be a little tricky. No, not actually. Why not? Because you see, up, you start to get your first warnings here. And then you get the down here. So you knew that was a good trade. And then if you shorted it, check it out. 15%, man, in 10 days. So, not bad, right? I think that's as far as it goes. It's regarding the indicator. We covered every single thing, and now we're gonna talk about alerts. Okay, how do you make your computer rings when you have an alert? So TradingView has a very simple way. I know a lot of people get confused with this, but it's simple. But the problem is that people have to think, and usually when it comes out to thinking, people are lazy. And the only thing you need to create all kinds of alerts, it's logic. I know logic hurts, especially if you're a lazy guy. It's gonna feel like you're dying and stuff, but it's important that you cross this line. Okay, so the first thing you have to choose that you're talking about the Spectro. So the condition is when Spectro does something. And here we have every single feature that we have in Spectro listed. Okay, so the most common one that people want to know, okay, it's the up and down confirmation. So if the up appears, I want it to bring up whatever. So I click here, up confirmation. Understand something. The things that are plotted on the chart, like not lines and not levels, things that are kind of a alert kind of thing, like the up and down, or the bearish, you know, the DEX confirmation ones, and the bearish and the bullish one, the triangles, they have to be done this way. And also the warnings too. You select them, and then you click greater than value, pay attention, 0.9. And then usually I do once per bar close. Okay? Because remember, this is the confirmation. This is the way that's not gonna repaint. Because this will only trigger in the confirmations. If you have a repainting signal, that's not gonna trigger your alert. So if you're one of the automation guys that not looking for, you know, all signals and you just wanna go into the confirmation ones, knock yourself out. Just choose this and that's it. When this rings, that's the confirmated ones. That's how you get rid of repainting. That's as easy as that. If you wanna get rid of repainting, just trade on bar close. But like I said and like I explained to you, this is stupid. As simple as that. Okay? Why greater than 0.9? Because those things that are, you know, like they're not a line, they're not a price, they're not a support level, they're not price related, they're a condition. So when this condition is true, it's equivalent to 1. When this condition is false, it's equivalent to 0. Therefore, if we have an up confirmation, the value is 1, which means that's greater than 0.9. You could use, you know, crossing up. It would work the same way because you understand the logic now. In the same way that the down confirmation, some people are like, oh, but it's not -1. No, it's not -1 because the condition is true. There's not minus true. It's just true. You know, the condition is true. So it would for the down confirmation, the up warning, it would work for the aggressive X bullish confirmation, you know, blah, 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 blah. They would all work this way, okay? And then you can choose if you want to send an SMS, email. Oh, the SMS is just for the most expensive plan, if I'm not mistaken. I have it, but you know, if you want it, you have to pay for TradingView. It's not my fault. But you can do sound, you can do email. I know that you can do email to SMS free. You just have to set it up. I don't know how. I don't use alerts because I just trade looking at the screen. You know, like but that's me. You know, like I don't like alerts because I feel like if I cannot use my brains to keep track of it, you know, like if I cannot fully keep pace of what's happening without having sounds and stuff, I feel like I should be trading less stuff because that can get confusing, if you know what I mean. You know, I understand that sometimes that you're expecting. When I use alerts is when I'm trading. I see a very good setup that's about to happen, you know, and it didn't happen. But then I'm on the daily chart, on the weekly chart, and sometimes this stuff takes days, you know, to happen. So that's when you might want to use an alert. But if you're trading like day trading or scalping, you're using alerts, you're gonna go crazy, man. But I mean, it's up to you, right? The next thing you need to learn, and this is super, 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 super important, it's how to create alerts based on the support levels. So in order for you to know what support level is what, there's a trick. You go here to settings, and if you go to backgrounds, you click here indicator values, arguments, blah, blah. Okay, it's scales. I apologize. You click scales, and then you click here indicator name label. There you go. So it shows you exactly what line is what. So let's say our alert system, it's when the price crosses up, whatever this is, what's this? DS3. You see DS3 here? So we go back to alerts there. And what we want now, it's let's say when Tesla crosses up the DS3, okay, so when the price crosses up DS3, you're gonna get an alert. Another important thing to see, I know it's stupid, but a lot of people forget, it's the date, man. So always set up, you know, the alert for a few days in advance, because I get a lot of support tickets like, oh, it's not working, but it's like, you know, set for yesterday. So please, just pay attention to the expiration date. And this is the message you're gonna get, whatever you're setting up. So you see, you literally can do anything you want if you understand this. Another thing, like, oh, I want to set up when the Spectre clouds appear. So understand what the Spectre clouds are based off. So you have here Spectre cloud bases and Spectre cloud, right? So what we want, it's when the Spectre clouds, let's get rid of some stuff so we can actually analyze what we're doing. Because now pretty much what I'm teaching you, it's logic. I shouldn't be even, need to teach you this stuff, because you see, this comes from rational thinking, by empirical observation, and that's what I want to teach you, man. I know you can be angry at me, but if you anger me, it's because I'm touching something that matters. Trust me. And being rational and being capable of thinking and making active decisions and conscious decisions, that's what it takes to make money in this market, man. It's not monkey business. You have to understand the people, the players, the interest, the industry, okay? But once you get it, it's it's the gateway to wealth. Like all of you know, but it's not easy. If you think it's easy, stop. Okay? So I'm sorry. Let's go back to the analysis here. Okay, so we have a Spectre cloud here. All right. So remember, everything can be edited and changed. So we want to know what's the Spectre basis, the Spectre cloud basis, and what's the Spectre cloud. So you see S cloud basis. What's that? Well, let's change the. Oh, you see what the basis is? So the basis is this big blue area. I know it, but I'm just trying to teach you, okay? So you see there's a line, a border. You see here? And then you have the Spectre clouds. Look. This is going to help you. Red. And line. Line width. Okay, good. So I got rid just of the background color so you understand what's happening. So I know it's a little hard to see, but I'm gonna make it easy for you. The red line is the basis, and it's, oh boy, my bad. It's here. Look. Now. There we go. Red. Here. You got red. Oh my god, I cannot follow the line. Jesus. Alright. So there you go. That's the red one here. Let me make it darker. But you see that the moment that the spectral lines, they start to appear, you see the blue line here, they diverge. What does that mean? It means that when the blue line, when the spectral cloud, it's bigger, it's greater than the Spectre basis, you get an alert. And then if it's a bearish one, it means that is down. So if it's smaller than, if it's crossing down, then you get a bearish signal. You see, it's all logic. you have all those triggers. Pretty much you have like infinite combinations that it's up to your system. I'm just trying to teach you the logic. Here you have all the things that we offer, and like I said, you have endless combinations right here. And with this we close everything. We cover everything there is to know in terms of the basics. And I think you understand how powerful this is now and how I use it. Okay, and oh, I created an alert. Crap. And most of all, how I actually use this in real life, you know, which is this. This is a fully working trading system. This is what I've been doing for the last many years. I don't know, probably not exactly like this, because actually you're getting the fancy thing out of it, because I actually made it look very, very well and very good for you guys, because the versions that I used for myself, they were much more rudimentary, you know. And that's kind of nice, because I had to improve everything for you guys, because now I'm making things for other people. You kind of think differently, you know, the approach. And that's how I use it. And like I said, I have a 60 to 75% precision, a little less in crypto, a little more in stocks and forex. And that's what I do for a living. That's exactly how I do it. I don't do anything else that's not here. I just use the screener and the Spectro, and I'm always reading the news, and I'm understanding the moment and the sentiment in the market, you know. And I do a lot of fundamental analysis too, you know, like the stock things that I have money on, like Apple, Amazon, Tesla. I'm always reading stuff, you know, like Tesla has been really, really good to trade lately. A lot of uncertainty. We had the chairman election and all kinds of stuff. So lots of good movements. But I too buy some Apple, some Facebook. Oh, Facebook was actually really, really good to trade. There was like a couple very, actually the biggest short in the history of the stock market just happened in Facebook, and actually I called it live. And you can see the trade on TradingView if you want. It's on my profile. So Apple, you know, when you look at Apple, which is here, okay, you see it's on a steady growth, and it didn't really go on a negative momentum for a very, very long time. You see, it didn't ever cross down, so it's just growing in value for many months, you know. But it's good because I diversify, and that's another thing you have to remember. Sometimes you have a couple losing hands, but you have the always winning one, you know, that's always kind of balancing out the losses. But that's, you know, portfolio management. This is risk management. You see, trading is much more than, you know, ups and downs. You have to know how to diversify, how to mitigate risk, how to hedge your positions, you know. And I'm being straight with you, because I get nothing if you lose money. I'm not a broker. So the more you trade doesn't change for me. For me, what changes is if you survive longer. So the longer you stay, the better it is for me, because you pay for me. That's my interest. It's easy to understand where my interest is. I need you to keep winning, because if you don't win, you cancel. It's as simple as that. So all my interests lie on helping you. In the broker, it's not really the case, because if they just want you to trade more. Because if you lose or win, they still make their commissions, you know. And also the coins or the assets, they don't really care for you. So it's important to understand the dynamic of the industry too, you know. And I think this is actually really good to give you lots of insights. Remember, the first one is crypto, and like I said, when Bitcoin goes up, kind of everything follows, you know. Like, look, this one kind of failed, you know, because it's Cardano Bitcoin, so it's kind of the relation. If this goes up, this tends to, you know, go down. But you see, most of things kind of just follow it. So if you're having a bad day or in the middle of the movement, you lost the entry, you see all this chart is useless. You have to look for trades here, and that's why you want to trade more stuff. Nowadays it's easy, man. Go trade forex, whatever. It's just literally like, it takes 5 minutes to open an account nowadays. And you know, the brokers are necessary. It's a necessary evil, but you know, it's the only option for you as a retail trader. So I hope that covers everything. I try to help you guys as most as I can to raise your consciousness, you know, to also set your expectations right. So you take your time and you learn and you read. And well, I hope you guys like it and it solves most of your guys' questions. And well, good luck with your trading.